Bitcoin has just closed its weekly candle above the major $60,000 support. Will the bulls be able to sustain this level, or are the bears going to step back in? In today's video, we're going to be doing a detailed short-term and macro analysis. Let's dive in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you all having a fantastic day today. In today's video, we're going to be taking a look at the macro charts, the short-term price action, the Bitcoin dominance chart, the total cryptocurrency market cap, the weekly candle close, and the potential for a altcoin season in 2024. Without further ado, we're going to be jumping right into it, but make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and so much more to keep you in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP, where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to our group chats, our general chat, trading chart and education chat, daily video help, news, and trade setup chat. If you're interested in getting access to that with over 600 members, contact me in the pinned comment of the free channel by clicking my name, or click these links for more information. Let's go ahead, guys, and dive on in. So as we said in the intro, we have a whole bunch to be talking about today. As we discussed in yesterday's video, the upcoming and current 24-hour period is a period of utmost importance, as we do have a significant weekly candle close occurring in 23 minutes. But before we get into Bitcoin and the broader markets, let's take a look at our market data. 24-hour volume is down 5.71% at 67 billion. 24-hour liquidations are up 9.52% at 54 million. Of the 54 million in liquidations, we can see a very even split between 27 million in long liquidations and 26 million in short liquidations. This gives us a good insight into the price action over the last 24 hours. If we do take a very brief look at this price action, we can see within the last 2 or 3 days, Bitcoin is still very much aggressively chopping sideways in a slight uptrend. We can see a lot of volatility toward the upside and volatility toward the downside, liquidating both longs and short positions. A key characteristic of what we will call a chop zone. So very choppy price action, and as we mentioned, it's very likely we'll see this chop continue moving into CPI data. We do have CPI data coming out now in 2 days' time, and a very, very important event this is going to be as a consequence of the notion that was pushed in the prior Federal Reserve meeting. A bit of speculation, a bit of uncertainty was being developing around the potential date for future interest rate cuts, or whether or not we're going to see those cuts. The current narrative is still that we are moving towards interest rates cuts, and while that narrative is intact, while the narrative that we are moving towards interest rate cuts are intact, the markets are likely to continue upwards on a macro scale. But again, while we do have the risk of inflation being more persistent, more aggressive than expected, and potential rising inflation, we could see some turbulence in the market, or at least the market turn a bit risk on in the short term, which is what we are seeing now moving into this inflation data. So if inflation data comes out bullish, the markets shall rally. If the inflation data comes out very bearish, we could see the markets pull back in anticipation for a bearish interest rate event, or potentially at least with a narrative which is controlling the price action to start flipping more bearish. So something to keep your mind on. Moving to the DXY. DXY is sitting very much stable over the last few days. Again, one of the main triggers for the DXY movements is going to be inflation data, so we're more or less watching that. All we need to know over here, guys, is below this support level, we are expecting continuations downwards. It's going to be bullish for risk assets. Above this local high is going to be a continuation upwards. This is going to be bearish. Between here is just very much going to be decision zone. A decision zone here bullish zone here, bearish zone here. Simple. Moving over to the S&P 500. Again, a fantastic week for the broader markets over here. S&P 500 really going ahead over here, sitting at $5,243. Again, we do want to see a break of that prior local high to see that next parabolic leg actually start. We are expecting a move to 6,000 if we do break above that level on the macro scale. Again, for macro continuations downwards, we need to break below 5,000. Again, this is going to be our decision range, this is going to be our bearish range, and this is going to be our bullish continuation range. A break under on the weekly will require a weekly candle close, which could result in a correction to the 2021 high. And of course, like we know, while we remain above support, the likely direction is a continuation into this level of resistance. The same goes for the Dow Jones here, exactly the same chart setup. It is pretty much identical. Again, looking for a break over that prior high point for a macro continuation upwards. A break of our current support level at 37.7 to 38 will result in a continuation downwards, and between those two levels, which is where we are sitting, is in that decision zone. So enough about that, guys. Let's go ahead and jump over to Bitcoin to show you the charts that we'll be going over. Of course, going over the short-term charts, what is happening on the immediate term price action, the key levels you need to be watching, and Bitcoin's likely next moves. The higher time frame charts in regards to the macro consolidation, the Bitcoin dominance chart, and how that could potentially impact the altcoin parabolic cycle, how the altcoin phase is looking in regards to, again, the structural formations and historical technical patterns, as well as the overlay chart of Bitcoin dominance on the altcoin chart to get a rough estimate of when the altcoin season could top out. We'll also be taking a look at the upcoming weekly candle close, guys, and of course going over the macro data. So let's go ahead and jump in. A quick word from BitUnix before we do. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay team, let's go ahead and jump on in, starting on the short-term price action. So as we can see, a lot has happened over the last 2 months, and over the last 2 months, we've seen a lot of changing emotions. We've gone from, we're going parabolic this week, we're going 100K to, we're going to 50K, we're going to 40K. We've seen a whole spectrum of emotions, and that is generally pretty consistent with what we expect to see during these macro consolidations. But it's always important, when in doubt, to really zoom out your focus, zoom out your perspective, and look at the facts, look at the data, look at the high time frame levels, the confluences behind these movements, and understand that price action is a representation of people's emotions, right? It's a representation of the decisions that buyers and sellers make over a higher time frame period. And those decisions are moved by economic policy, macroeconomics, okay? It could be societal perspective, monetary policies, okay, a whole variety of different things, even developments in the industry itself, such as ETF news. These factors influence buyers and sellers to actually click buy or click sell, which then drives the price action upwards. So when we're looking at price action, when we're looking at the strength behind price action, it's important to understand that the price action itself, what the price of the asset is not always a direct reflection of the developing strength, or the strength behind the asset, or most importantly, is not always a reflection of where the asset is going to go in the future. So we're not always looking at, Bitcoin's at 60,000 or blah, blah, blah. We're looking again at the bigger picture and then zooming in and doing a contextual analysis. So let's start on that smaller picture, however, and talk about the short term. In the last 24 hours, we have seen a lot of chop for Bitcoin. It's been quite choppy. We said in our prior video that we would likely see a continuation upwards for Bitcoin if we broke above that 61.2 level to the 61.5 level. We did see that. We saw a break toward the upside, but it wasn't sustained. We saw a little bit of a break up. We saw Bitcoin enter that lower volume resistance range, as we can see here on the VRPV, when it redistributes over here. We can see that lower volume resistance range over here. We did go ahead and enter in there. However, we got rejected, right? Again, with the CPI data coming up, the market is quite emotional right now. It is resilient to upward or downward moves, and we haven't seen too much movement overall in the market that can facilitate these continuations. However, we can see we are pushing back now into this level of resistance, and we are still expecting, while we do remain above here, the expected direction is still going to be upwards. So again, guys, while we do remain above this resistance, we are looking for continuations up to these peaks, these prior resistance points on the VRPV at 62.8 to 63,000. Furthermore, we do have a nice uptrend that has been established. Again, we are still sitting above that uptrending trend line. The uptrending trend line is, of course, a double point confluence. We do have 2 points of retest to validate this trend as a valid trend line. And while we do remain above this trend line, again, the expected trajectory of the price action is upwards. So in the short term, there is a good indication we are going to be continuing toward the upside over here. And again, we just need to break over this resistance to really give it a chance to continue upwards. If we do break through this resistance, like we just said, we are likely going to see this entire low volume resistance range clear, and we are going to see a move back into this upper level of resistance at around 62,800. Now, this is all provided once more that this lower level of support can hold. But all besides that, not really that much has changed on the short-term price action. If we bring up some of our technicals, such as the RSI, we haven't really seen that much development on the price action. What we have seen here, guys, is again, the volatility is starting to reduce, as we can see that the 50 EMA is starting to pinch at the price action, and the price action is now flipping the 50 EMA, suggesting we've had again increased bearish volatility into compression, which is a representation of decreasing bearish strength. And now we have got the bulls in control on the short term. So we've got a bit of positive strength building over here, and the RSI is now in an overall uptrend, as we can see, representing that the buyers are starting to step in. The buyers are starting to take control, but more importantly, it represents that these sellers from this move over here into the support level are starting to exhaust. So it gives us a good potential to see that continuation upwards on the short term, and only if this uptrend is broken will these sellers reclaim control of this price action and facilitate the next leg down. So let's talk about that really quickly. If these sellers do reclaim control of this price action and break this trend line, where could Bitcoin go? Well, let's take a look, guys. We could see a continuation into our lower region of support, which is going to be this local high point of that prior high before the continuation upwards at around 59,800 to 59,600, maybe that $60,000 region. So that is what we're expecting on the bearish case scenario if we do break down, but at the moment, the likely direction is going to be upwards. Now let's zoom out our focus just a small amount to the 4-hour chart and talk about what is happening structurally. As we can see, guys, we have some key levels we are paying attention to. First and foremost, I want to go ahead and draw your attention to this trend line. We have a nice clear downtrend, which is going to be represented by this trend line, and we do have a potential descending channel formation forming. Now I say potential because we do only have, again, 1, 2, 3 points. And generally, to validate a structure, and I say generally because this is a rule I developed myself personally. It is not a market rule. It's not a common rule. It's my personal rule. I like to use 5 points method, a 5-point validation method, which means I like to see 3 retests on one side and at least 2 retests on another side to validate the structure. So that is something I am concerned about. We may not be developing a valid descending channel formation here, but it doesn't really matter if that is the case, because if we do break out of this downtrend, we will still have broken out of a pretty major, what is this, about a 2-week-long downtrend diagonal resistance, which could facilitate a continuation back upwards. So again, guys, if we zoom out to the 4-hour, what we can see here is a nice 2-week-long downtrend against a horizontal level of support, which is holding as support. On the short term, we can see bearish exhaustion, establishing this area again as an area of major support, an area of which the buyers are trying to push the price up from. If we break through our trend line, we are likely going to see a continuation toward the upside. Now let's zoom out a little bit more, guys. Zooming out over here, we can see the higher time frame range. This is going to be our 2-month-long horizontal consolidation, our major high time frame range. To put very simply, there are 2 regions within horizontal consolidation. We have got our midline, we have got our upper region, and we have got our lower region. Our lower region is the bearish region, our upper region is the bullish region. And this is in regards to where the price action is going to go on the short term, but in regards to the probabilities of range high, okay, and range low retests. While we are in the bearish region, the range low retest is more probable than a range high retest. When we are in a bullish region, the range high retest is more probable than the range low retest. So therefore, if we do want to see a continuation to a range high, which we do know is going to be the trigger point for a macro continuation through that 74k region and into a new all-time high, we need to break above the midline, which is at $67,000, as we can see represented by this red box. This is the bullish trigger for a move to the range high. So for us to see that continuation upwards, all the bullish things that need to occur that we've said on the short term need to develop. We need to break above the 61,500 level. We need to break above that 2-week long downtrend to even think about a facilitated move toward that resistance, which would then result in a break upwards. So those are the things we are watching, guys, on the higher time frame. Let's now zoom out once again. So we're doing a lot of zooming out today. We're zooming from the smaller time frame to the higher time frame. Zooming out again, guys. The high time frame charts. Let's delete everything on the chart really quickly. We have got one trend line we are focused on more than any other trend line at the moment. And this trend line is going to be this uptrending diagonal trend line. This uptrending diagonal trend line is literally the bull market. This trend line represents the bull market. If we take a horizontal trend line over here, we have got our bear market resistance, okay, meaning everything below here is bear market accumulation. This is our bear market into bear market lows. We broke above this point at 32,000, right over here, our bear market resistance. That resulted in the initiation of the bull run. The bull run, again, the trend has initiated from below that trend line, above that trend line, establishing a uptrend, and this has been a 7-month-long bull market so far. This trend line is the trend line we need to hold above to remain bullish. If we break below this trend line, and only then do we turn macro bearish for Bitcoin. Therefore, worst case scenario, we see a correction down to here. Technically, on the higher time frame, we are still bullish. But again, guys, I want to draw you back to the most important thing. The price action is not always a direct reflection. If interest rates start to become bearish again, we start to raise interest rates, this will be a good indication that the top is potentially in and you should be exiting risk assets. So again, we are watching macroeconomic drivers to make decisions on the macro scale in Bitcoin, okay? The price fluctuation, the price volatility and fluctuation is just a representation of investors' emotions. It is not always a direct representation of the strength of the asset, or most importantly, the next direct moves of the asset. We have to remember that the price is not always a representation of the value of the asset. When we see bear markets and asset prices for reputable companies drop to very, very lows, do you think that is a value? Do you think that is a good representation of the value of the company? It is not. Okay, the asset price, or what we saw, the market price, is not always a representation of the value of an asset. It is just, again, a perceived value of the asset because the market is emotional. So let's go ahead now and jump over to a slightly higher time frame chart and talk about the weekly. The weekly candle close is happening in 5 minutes. And like we said already, guys, provided we remain above, we have to speed up this video because we're running out of time. Provided we remain above $60,000, we are bullish. We are bullish. This is a support resistance flip. Very, very good stuff over here above 60,000, expecting continuations upwards. Nothing more to say, guys. We've got 4 minutes and 40 seconds remaining. Highly unlikely we break down 60,000 over here in the next 4 minutes. So we can say with a good degree of certainty, we have closed that weekly candle above 60,000. For another week at least, we are good. If we break below here next week, terrible stuff. But for now, very, very good stuff. Held above, looking strong, looking bullish. Support resistance flip, continuation upwards. Total market cap, total to market cap, exactly the same thing. 4 minutes, very unlikely we break underneath our 2.08 trillion. We are sitting above here expecting macro continuations upwards. Nice support resistance flip for now. Again, very bullish provided we do remain above. Let's go ahead and jump over to Bitcoin dominance and altcoins and then wrap it up with the macro charts at the end. So really quickly, guys, Bitcoin dominance over here, we can see we are expecting a macro continuation downwards. Generally, what we do see is Bitcoin dominance will fall. And when it does fall, we reach that 40 to 38% region, and that is generally where we do see the top. During the point at which we do reject and crash massively, we generally see altcoins rally aggressively, and we do enter an altcoin season. For us to enter altcoin season, there has to be two prerequisites. Number one, Bitcoin dominance needs to drop, and number two, the total cryptocurrency market cap needs to increase. And again, the total cryptocurrency market cap is at support over here, so very likely to see that increase in price. If we do see Bitcoin dominance, however, increase, okay, we will see Bitcoin gain in comparison to altcoins, and then the direction of the total market cap will determine the direction of the asset. So we do see a total increase while Bitcoin dominance increases. Both altcoins and Bitcoin will increase, but Bitcoin will increase more, okay? And if we see Bitcoin dominance increase and the total decrease, both Bitcoin and altcoins will decrease, but altcoins will decrease more. So again, the only scenario we see here for altcoin season is Bitcoin dominance dropping and the total increasing. Let's take a look at prior cycles. If we can take a look at this cycle over here, what we can see is the orange chart is going to be Bitcoin dominance. What we can see over here to here is going to be our altcoin season. If we draw a vertical line from these 2 points, that peak over here, which is going to be, let's change that to red so we can see it a little bit better, to a thick line, there we go, to this point over here, that is going to be our altcoin season. We can see aggressive rally for altcoins of around 600% during that 135-day period. If we take a look and assume that altcoins, that Bitcoin dominance topped over here and draw 135 days from that point, that would give us an expected top date for altcoins at around late August 2024. And again, we could see an expected aggressive rally within that next 135 days for altcoins. If we go ahead now and take a look at altcoins and the prior structural significances while removing this chart really quickly, what we can see, let's just go ahead and just get this out of the way. Let's just turn it into a flat line. But so I don't really want to delete the chart right now. What we can see, we have this 6-point verification method. We've got 6 points. Point number one is the dead cat bounce high from the prior cycle. Point number two is the bear market resistance. Point number three is the breakout of the bear market resistance. Point number four is the initiation of the bull market. And point number five is the parabolic phase into point number six, which is the top. What we can see, we have our bear market dead cat bounce high. Perfect. We've got the bear market resistance. We broke through that. We have point number three. Point number four, we are in point number four as we speak, the initiation of the bull market. So for that parabolic phase to start for altcoins, we need to see a break of point number one. A break of point number one is the confirmation of the parabolic phase. We are not going to see a parabolic phase until point number one breaks. Now, invalidations of this is, if the weekly chart for altcoins, a total of 3, breaks underneath the pi cycle indicator, the midlines, which we can see represented by, again, I'll delete everything, the yellow and green line. If we weekly close under this point, that would be an invalidation. If we look at prior structural significances at that point, at that phase 4, which is right over here, we saw a retest of that level. We remained above it the entire time. We are expecting the same thing. Retest, which we have done, and we expect to remain above it and continue upwards. So altcoin season is potentially upon us. It is on the way according to our structural levels and our technical levels. It is something we have to be paying attention to. Again, regardless of what happens, you have to be prepared for all scenarios, but overall, provided everything goes how it has gone, provided the market increases from here, provided the weekly chart is able to sustain, provided the total market cap increases and Bitcoin dominance decreases, we will likely see our altcoin season. That being said, guys, I think we might leave the video there, and we'll have to come back and discuss these macro charts in tomorrow's video. So tomorrow we'll come back and go over the short term again, discuss the vortex trend indicator, which is a really good top signal I do actually want to be talking about, the current weekly chart from a technical perspective, and a multitude of other various charts we do want to be taking a look at. So thank you for tuning in today, guys. I hope you have a fantastic day. Check out the Crypto Academy courses. Actually, there's a link down below. It is going to be a 10-unit course that teaches you TA, teaches you objective analysis, teaches you trading, everything you need to know about, candlesticks, technical indicators, risk management, ECT. Check it out. Thanks for tuning in, and catch you guys in the next one. Bye.